think, over the past 12 months, the fund has transformed into something much more public and of course larger. So we have grown from 27 investors to more than 4,000 investors. And just a little bit about where our investors are today. Our investors are from the Baltics, of course. Some institutions, but also private individuals. But we have about 2/3, or not, maybe even three quarters, 75% of the investors from the Nordics, mainly from Sweden and from Finland. So we listed the fund in Tallinn in 2016, last year in July, raised 30 million euros of capital, of which we could invest into 2 new properties. And we additionally made a few investments then in December, when we raised additional 20 million euros during the listing in Stockholm. And that was also deployed in 2 properties. The share price in Tallinn has been quite stable. It's noted in euro. And are there any investors, for example, in this group, if I may ask? Okay, not here. So in euro, the share price has been very stable, and that's also because the investors that have invested in euro have been much long-term oriented. They have also invested larger amounts. On average, I think 1 euro investor has invested around 5,000-6,000 euros per investor, whereas what we saw in Stockholm in December was that there were a lot of investors, but the tickets that they invested were very small. There were even investors that invested 5 euros. So it is really an interesting comparison, because the Stockholm capital market is extremely hot. There were 100 IPOs in Stockholm Nasdaq stock exchange approximately last year, and the investment has been made so easy for these investors that I felt that some of the investors that actually invested into Baltic Horizon in December didn't really know what they were investing in. And then what happened, I think in January and February, we saw quite a bit of volatility, meaning that those investors that sort of understood that, oh, this is not a fintech company that will increase its value by 30% in 2 days, started to sell. But then there were again these long-term investors that wanted to buy those units. So we saw quite a bit of volatility over the first quarter this year. However, and even there was some arbitrage possibilities, that the difference of it, it's the same unit. One is listed in Tallinn, one is listed in Stockholm. The difference was at some point 7-8%, and I think some people also took advantage of that. We continuously remain to be a commercial real estate fund, investing into retail and office properties in Baltic capital cities. We continuously leverage our portfolio at 50% with the banks, and we have a target to grow our fund to a €1 billion status. Now, how quickly that will happen, that's an answer I cannot give you at this point. We are doing as well valuations now on a semi-annual basis. So the next valuations will be taking place in June, and we will then see what the evaluators say about our properties. Previous valuations were actually done in September on an exceptional basis last year. In regards to dividends, which is our main goal, we are oriented in paying regular dividends, and our dividend target is between 7 and 9%. Then if you look at the performance since the listing in Tallinn from July, We have made 3 dividend distributions or cash payouts to investors in the amount of 7.3 cents, and that translates into a roughly 5.5% on that price. That was the listing price in Tallinn, 1.31, and we still have the 4th quarterly dividend coming, and that's also written in the financial calendar when on our webpage when that will be disclosed. A few words about property markets in the Baltics. You know, there's a lot of talk about, you know, where is the boom, where is the oversupply, where is the next crisis coming, and so forth. In the real estate conference in Vilnius just in May, it was quite well summarized that you know, generally we're doing quite well as economies, and as the capital structure of the structure of the economies is doing well. You may see some, you know, oversupply, overbuilding in some cities and in some cases. For example, you know, if you ask me where is the biggest vacancy risk in office segment today, then definitely Tallinn, and that's where, you know, new buildings are coming up, so more competition for the tenants. Whereas in Vilnius, the buildings are being built as well, but the tenant demand is much stronger. So if you look at the development happening here, then because of the demand, it's actually not as bad as in Tallinn. In Riga, however, and this is what I see also from the portfolio, and these are the dynamics of the portfolio, that in Riga I have a stronger position to negotiate with tenants because just of the lack of supply of new office space. So, you know, if you look hard then and negotiate hard and time your investments at the right moments with sellers that actually need to sell or have to sell, then you can still make good deals in the Baltics. Now, you know, all of the fund managers, I think, in the Baltic states, the question is that, are you still investing? You know, is it too expensive already? And yes, many times it is too expensive, and you know, 95% of the time, basically, you know, you have to say no. But then you have a few properties that you see long-term potential. Maybe it also fits your portfolio very, very well from the risk diversification point of view. So these are the investments we're still looking for. And actually raising capital as of today. For Swedish investors, of course, the yield gap of 300 basis points is still very, very attractive. Stockholm yields are at 3.5% already, so effectively, you know, at a few percent the return on equity level. And interest rates, are they going to increase? Yes, but most probably not within the next 12 to 18 months. It of course depends on who will be the next president of the European Central Bank. Currently, Mr. Draghi is sort of in favor of saving those countries that have a lot of debt, and not in favor of increasing the interest rates that quickly. That's my opinion. But if a German would replace him, then I think he would maybe think of it in a different way. Again, the boom level, so in terms of rents and prices, we haven't yet achieved, but I think it's been relatively stable in terms of rental levels and prices. But of course, the yields are also dropping in the Baltic states, and I think you know, 6.5% property yield is not anymore something that is something special. So this is our portfolio. We have grown our portfolio from 5 assets to 9. I think it's an excellent diversification, not an excellent one, but it's as best as one could diversify in the Baltic capitals, meaning that we have retail and office properties in all of the cities, modern buildings, and most importantly, they are all almost fully let. So 97.6% was the occupancy level in all of these buildings. Some buildings need more work than the others, and I think if just to maybe go one by one, Europa Shopping Center is always a very dynamic place to be. I'm actually just coming from there. Had a board meeting there to discuss the future of Europa Shopping Center and the positioning of it. I'm happy to say that we finally fixed the parking issue. We're investing into the parking house together with Hanner, who owns the other part of the parking house, and on a very friendly terms. So we have a new parking app now to be launched, so to make it more convenient. We're repainting the walls and so forth to make it more attractive for the visitors and tenants. But it's the tenant mix of Europa is always under our scrutiny, and of course a lot of discussions always with tenants, new tenants. So, but I have a very good feeling about the future of Europa because of the surroundings here of the buildings now being completed, and we are as well renewing our restaurants. So I think that will definitely increase the visitors of the center. Then Ukmala's Bureau is a fully leased office building in Riga. It's doing very well. It's one of the properties where we have to really choose even tenants who to keep, because some larger tenants are looking to expand. So it's a totally different approach, if you compare it to an office building in Tallinn. Then in Domus Pro we are expanding, now completing the office part, which is on more than half let, and hope to have a complex on its own soon, which has a food store, a lot of services, a gym, then Hansa tiles, but also a kindergarten, perhaps a pet store, pet clinic, so a very wide and diversified tenant mix. Yeah, G4S, nothing really new there, a long-term lease. Lincoln office, we're happy to have heard that one of the largest tenants, despite of the new supply in Tallinn, has decided to stay in the building. So we hope to see full occupancy in that building as well. And Duetto, very, very proud and happy that Vilnius has decided to come to the building as a second anchor tenant in addition to Lindorf. We're thinking about Duetto 2 now. If you ask me, when do you expand and do you build, would you sort of do Duetto 2 today? We're partnering with YIT here. Then I would say yes. Even though there are buildings being built in Vilnius, we like to compete with those buildings, because the tenants, we think that we have an excellent product, excellent location, so we're definitely competing as well for those tenants. And Coca-Cola Plaza in Tallinn, we're establishing there a development project as well around Coca-Cola Plaza. Just to give you an example, Coca-Cola Plaza valuation today is approximately 1,400 euros per square meter. That's the valuation. And the valuation is so low because of the cinema lease contract. The rental level, as you can see, is 9.5 euros. But it's the most centrally located, one of the most centrally located buildings in Tallinn today. So we see huge potential there. Pirita is a neighborhood shopping center in Tallinn and Sky Supermarket in Riga, where a new IKEA is being built. Overall, I'm just happy to say that there's no surprises in our portfolio over the past 6 months, and this is, I think, what the investors are looking for: stability in terms of tenants, in terms of occupancy, in terms of cash flows. Of course, on the side, we're refinancing our loans continuously with the banks, and still getting very good terms. Now better than the terms that are offered actually in Nordic markets. The banks have really cut down on offering very good terms in Sweden. Yesterday I was in Stockholm, and of course we discussed as well with investors the situation in Stockholm today, where basically the prices of real estate have doubled in the past 5 years, which is absolutely unheard of. But then again, the economy is doing very well, And the banks are lending less and less and increasing the margins in Stockholm. We have the largest tenants, the G4S, so I think one of the strongest tenant mixes in our portfolio. And investors have also asked me many times, do you make Baltic Horizon 2, Baltic Horizon 3 or 4 or something like this, would you buy new properties into the new fund? And the answer is no. We will have this as the only listed fund for the Baltic real estate, and all new investments will go into this fund, so into the same pot. And of course, when we grow, the diversification of the portfolio will definitely benefit the investors, not only risk management level, but cost diversification level too. Our board is still the same. Happy to have 2 Lithuanians on our management board. We have very active and diverse discussions always, so very good team. A few slides just to finish up, just to see the history of the fund in terms of returns, and on top you can see how the total return has been on average about 15%, and how the dividend potential has increased when the property has enlarged. And you can see these red dots are the dividend payouts that we have made. This of course is we have made after this two more payouts. And some sensitivity calculations that our partners at Catella have done that estimate that in case the occupancy stays very high and interest rates which are actually at 2% level today, then that's the dividend potential of the portfolio. Whereas if you look at the annual rental growth, if you add that to it, which is through indexation, then the total return we are aiming at is 12 to 15%. I think we're definitely on target with this. And some of the risks, again, operational risks, have to make sure that, one of the things how we manage operational risks is we buy new properties, because that's when we eliminate the capex issues from day one. I think there are different strategies approaching real estate. You buy an old property in a very good location, you turn it around, you make a lot of investments. Maybe for 6 to 12 months there is no income. That's not what we're doing. We are buying new properties that already have that cash flow and that stability in them, and are have long-term attractiveness for tenants. Financial risk, I briefly talked about. The banks are still lending, even though more and more careful, but especially towards development, which is absolutely fine. I think they need to be careful. But to a cash flow buyer who puts 50% equity, we have a very good relationship with them overall as well. And overall, I think if somebody asks me if Baltic real estate is not liquid, then hopefully we have at least made a very strong attempt to change that view with listing the fund in 2 stock exchanges. We are, I think, the 7th most traded security today in the Baltic market. So very, let's say, a lot of interest from the investors.